Hello and welcome to Big Deal. I'm Nisha Poddar. Now, one sector which has been and continues to be the most active one in mergers and acquisitions is the cement sector. Now, Adani's entry in the cement sector with the mammoth acquisition of Ambuja and ACC is a big disruption in this space and will continue to fuel the deal space as more consolidation really picks up. So the big boys, Birla with largest cement player Ultratech, Adani with aspirations to become number one, and JSW Group's ambitions in the similar space is likely to really create immense M&A action. So let's deep dive on what's in store in the cement landscape in the country as it gears up for a complete overhaul in the next few years to come. Let me welcome on Big Deal today Jigar Mistry, Anil Singhvi and Mangesh Bhadang. All of them have tracked and have been part of the cement sector very, very closely. Gentlemen, welcome to CNBC TV18. Anil Singhvi, given that you have led cement companies in the past, you're still associated with this particular sector, and you keep a close watch on this. What's your perspective on the big disruption with the entry of Adani that this sector has seen, and how much M&A activity are we expecting also in this space?
Thanks, Nisha. Thanks for your kind words. My first take is that I think the industry looked very lackluster, really not having many deals and all that. And I think with the entry of Mr. Adani, the whole landscape is going to change and change in a big way. I'm recollecting my own days of Ambuja, and I think we were like one of the very fast movers in the industry, looked at consolidation way back in late 90s and early 2000. And I think we're going to repeat similar kind of trend now for next 3 or 5 years. So to me, I think this one change of ownership from Holcim to Adani is a big tectonic shift which is going to be there in the cement industry. So I think my take is that we will have a far bigger consolidation. Hitherto, the growth was largely on account of cement companies growing organically. I think it's going to be now game of M&A.
That's right, game of M&A. But Anil Singhvi, you'll agree with me that in the past also, whenever a big asset has come in, very recently Ambuja, ACC, there have been big players who have really fought neck and neck to really get that asset. And that was a repeat of the Lafarge transaction that we had seen a few years back where Nirma finally bought it, but all the big boys were involved in that particular bid process as well. So any time, whenever cement assets are up for sale, there has been huge amount of action, and especially from big business houses. Now, Jigar, you've been tracking this space for a very long time. What are the pros and cons of the kind of consolidation that we are gearing up for in the cement sector?
Good afternoon, Nisha. Thanks for inviting me. Good afternoon to all the fellow panelists as well. I think I can sort of break it down into 3 parts, right? You look at the period prior 2008, right? So, you know, Holcim came in, bought Ambuja ACC. Back then, capacity was 160 million ton, demand was 140, and from 2005 to 8, yes, they saw, you know, EBITDA per ton sort of jumping from 400 to almost 1,000 rupees a ton, led by very strong capacity utilization. Then from 2008 to 2022 was phase 2, when, you know, the almost 20% of capacity sort of refused to grow.
Yes.
Overall capacity grew from 160 to almost 550 million tons, and your demand grew just from 140 to something like 350 million tons. So that 1,000 rupee EBITDA stayed 1,000 rupee. Yeah. Right? The entry of Adani now marks phase 3 in the cement sector, when everybody seems to be very keen on growing, right? Adani has said 70 to something like 210 million tons, Ultratech, yes, also 210. Shree, you know, Dalmia, all of them want to grow. Yes. So possibly now looking at everybody maintaining their capacity and volume market share, yes, which brings in some best practices to answer your question. You know, cement is sold something like 5 rupees a kilo. So yes, there is a limit to which you can ship your product out. And therefore, it's a very, very heavy sort of logistics, packing, fuel heavy business.
That's why it's a regional play.
Exactly. And now you will see with all these players trying to grow, There will be some M&A plays. We'll come to that as we go ahead in the show.
Yeah.
But makes for very interesting times. I am with you on that one.
So, Jigar, it's interesting time indeed, because let me say that, you know, the market participants, analysts all across are having a field day in really doing the guesswork on what's up for sale and how will this consolidation really play out. Ultratech will also not want to leave its numero uno position. Adani will try to beat them in becoming the #1 player in the country. And JSW Group also has the bandwidth of growing with acquisitions we have seen in the other sectors. So, Mangesh, if we really put the spotlight on the deal dynamics, how are you seeing the industry trends changing? And what is the fight for? Because the demand has been lower. And, you know, are we really looking at a thrust towards infrastructure, demand to be far higher? But what about the pricing power and margin play by these players?
Yeah, hi. The consolidation within the cement industry has been talked about for very long, but we have seen a relatively lower amount of consolidation. So we have seen change of hands for sure, but definitely consolidation has been very far in between, and that has largely been driven by distress in the balance sheet. So if you look at most of the cement companies right now, the distress is far less, barring say very few names that you can come across. And that is definitely not going to fulfill the ambitions of the group that has entered. So either we are looking at, and if you look at most of the other players, I think there are very few willing sellers in the market, irrespective of the value that you offer to them. So I think whether it could be a hostile takeover game or it's something that is already being put up between the corporates that they would want to merge or consolidate these businesses, that is something that would definitely happen. Our view on the sector is basically if the Adani Group goes through inorganic route for this said expansion, at least up to 50% of their total capex plans, then it would not have a very severe impact on the demand-supply dynamics. If they are not able to garner that share through acquisition, then definitely the supply in the market could be relatively on the higher side. Right. That's the view we have. And in terms of deal dynamics, or if you look at the most of the targets that are there in the market, I think they would have a field day right now, because it is not only the Adani, I think probably even the other larger players would be willing to offer a relatively higher price than they would have had earlier. So I think really definitely interesting in terms of deal.
So Mangesh, what is the reason for India Cement to fall so much? 3 days on the trot, it hasn't seen any speck of recovery, and it has fallen quite a lot from the time they announced the JSW deal to sell off the mining asset. What is your reading, very quickly?
Yeah, so in my opinion, anyway, the stock had risen also substantially, and I think it was risen on the hopes of a whole company deal that could happen with an aggressor or probably a large player like Adani. But then this deal which has happened with JSW, it is only for one mining unit. So I think that confidence that the investor had that probably this would go through to Adani and they would pay a relatively high premium to them, I think that has fizzled out a bit. And overall, JSW have got a really good asset. They are setting up a 5 million ton plant on it, on the limestone mine. And this one, as an investor, I would have not liked any company to sell the limestone mine because it's a very precious reserve.
Yes, so therefore, geography, Mangesh, as well as the mining assets for the real backward integration to really make the right amount of margins, that's very critical for the buyers as well. Anil Singhvi, how do you read into this India Cement's move and the kind of stock reaction, and do you expect it to be a takeover candidate from here on now after this development?
Nisha, 2 points. One is that they are predominantly South player. So having this asset in MP, and they would have had to incur large capex, and they already have a lot of that. So I don't think they would have gone ahead and set up a cement plant. So I think it makes sense to really lighten the balance sheet, that if you don't have any intention in a foreseeable future, then you monetize it and move. Now, why stock market has gone up and why share prices have come down? Essentially, people have built hopes that, okay, India Cement looks, because Mr. Damani is there, so someday this transaction will take place. And when they see a small transaction of only 400 odd crores, I think it's an immediate reaction to that. Going forward, whether India Cement would really get out of this business and then be sold, I have my doubts. I've been seeing India Cement for the last 40 years. Enough times he has gone through all the problem, but I think Mr. Srinivasan is a great fighter. He has gone through a lot of times. I think he's been in the oldest in the cement industry today among all cement players. So I have very high regard for him to have withstood all the problems in the industry right from the Levy days to today. So he is passionate about cement. I think to very large extent people attach this that okay, that what value are you trading, $60, $70? I don't think cement industry is really working on that kind of thing, a particular M&A. I've done enough M&A in my life on this. And secondly, I think Mangesh made a point that, weaker players get sold out. I mean, we sold out when Ambuja was the highest profit making to Holcim. And again, the same thing repeated when Holcim sold out to Adani. So it doesn't work, $60, $70, $210. It all depends upon how you really approach the subject. How do you really want to work around it? The point which Mangesh made was that whether Adani's will spend 50% of what they have today, about 25,000 odd crores, out of 20,000 crore infusion. According to me, they will be buying assets. They will not be building assets.
So out of all that you said, Anil Singhvi, there's one very important takeaway that some of these promoters are fighters, and the promoter fabric of the country plays a very important role in the M&A game as well. So you'll see a lot of those histrionics also play out. It won't be an easy consolidation also. So we'll actually slip into a short breather on the show, and we'll come back and discuss some of these aspects and also the pricing dynamics in the cement sector because of hectic deal activity. Stay tuned to Big Deal.